Like a lot of Bitcoiners, I really don't like to sell Bitcoin. For me, the whole point is to accumulate more and more over time. So when I tell you that I've sold Bitcoin 3 different times over the last 7 months, once in November, once in February, and once just last week, you may think that I've lost the plot. I didn't. After each of those sales, I actually ended up with more Bitcoin than I had before, and I'm going to save real money on my tax bill. The strategy is called tax loss harvesting, and Bitcoin is especially well suited to it. Today I'm going to walk through the exact math on these 3 transactions, and I'm going to share how the transaction I made in November of 2025 saved me over $800 on my 2025 taxes. I'm Michael, and this is Betirement. One quick note before we get into it, I'm not a financial advisor or a CPA. Nothing in this video is investment or tax advice. I'm sharing my own situation to illustrate how tax loss harvesting can work. Tax law is complicated and your situation is different from mine. You should really talk to an accountant before you make any moves based on this video. So what is tax loss harvesting? At a high level, it's very simple. When you sell an asset for less than what you paid for it, you realize a capital loss. And that capital loss can offset capital gains that you have from other transactions. And those might be sales of real estate or stocks or other Bitcoin transactions. And by offsetting those capital gains, you reduce your taxable income. And up to $3,000 of leftover loss can offset ordinary income that you have each year. And anything beyond that carries forward into future years. The dream version of this strategy is that you sell at a loss and immediately buy back that same position. But for stocks, the IRS doesn't let you do that. Let's say I own 100 shares of Apple. I bought the shares at $200 each, and now they're trading at $160. I'd love to sell, book that $4,000 loss, and immediately buy the 100 shares of Apple back. But the IRS has a rule called the wash sale rule. If I sell Apple shares at a loss and buy Apple shares within 30 days, either before or after the sale, the loss is disallowed. That's what the IRS calls a wash sale. I lose the tax benefit entirely. So with stocks, you need to be out of the position for 31 days. And if Apple shares rip up 15% after I sell them, I lose the tax benefit because I had to buy them back at a higher price. So here's where it gets interesting with Bitcoin. The IRS classifies Bitcoin as property, not as a security. The wash sale rule, section 1091 of the tax code, applies to securities. It currently does not apply to Bitcoin, which means I can sell Bitcoin at a loss, harvest the tax loss, and buy Bitcoin back the same day. There's no 30-day waiting period. We all know that Bitcoin's price can move dramatically over a 30-day window, so it's great that we can lock in a tax loss without worrying about the wash sale rule. This is the cleanest version of the strategy that exists in the U.S. tax code right now. Now, I do want to highlight that Congress has tried multiple times to extend the wash sale rule to apply to digital assets. It may happen at some point, but as of today in May of 2026, it has not, and the strategy still works. All right, let's get into my actual trades. The numbers I'm about to share are based on my actual trades, but I'm using a BTC amount of 0.2 Bitcoins per trade just for illustration purposes. Trade number 1 was in November of 2025. I bought this Bitcoin when it was at $107,722 per coin. By November, Bitcoin had fallen to $91,440. So I sold the 0.2 Bitcoin and locked in a capital loss of $3,256. Trade number 2 I made in February of 2026. I had purchased this lot of Bitcoin when it was at $106,582. As we know, Bitcoin fell significantly in February of 2026, so I sold this lot of Bitcoin when Bitcoin price had fallen to $70,320. And that was a much bigger drop, so I locked in a capital loss of $7,252. And finally, trade number 3, which I made recently in May of 2026. I bought this lot when Bitcoin was $95,491 and sold when it was at $81,600. This locked in a $2,778 loss. So across the 3 trades, I locked in capital losses of $13,300. But here's the catch, and something that a lot of people gloss over. So if the goal is to end up with the same or even more Bitcoin than you had when you started, you need to think carefully about your repurchase price. Because when you sell, the exchange takes a fee, and when you buy back, the exchange takes another fee. 1% on transactions is somewhat typical of what exchanges typically charge. Now, if you're trading in higher volumes, you may be able to get your fee down to about 0.7%. But for illustration, I'm going to assume 1% on the sale and 1% on the purchase. And this means that you need to buy back Bitcoin at about 2% lower price than what you sold it at. Otherwise, you'll end up with less Bitcoin than you started with. So for each of these 3 trades that I made, I set limit orders at 2% lower than my sales price to buy the Bitcoin back. So for example, on this most recent sale that I made in May, I sold at $81,600 and bought back at $79,968. So for all 3 of these cases, I was able to buy back slightly more Bitcoin than I had before. And I was careful to watch the price action to make sure I was selling when Bitcoin was up slightly so that it was more likely to be dropping in the coming days. So for example, on this May order, I sold at $81,600 as Bitcoin was surging when the Senate Banking Committee passed the Clarity Act. On that day, Bitcoin had started in the $79,000 range and was surging up past $81,000. I figured it was a good time to sell and a reasonable chance that the Bitcoin price would sell off. And of course it was right. Later that day, it started to fall back down. That's the key. I really want to end up with at least the same amount or slightly more Bitcoin than I had before when I do one of these transactions. Now let's put a real dollar number on this tax savings, because that November 2025 sale had a real impact on my 2025 tax obligation. In 2025, I had a stock position that I sold for a $5,000 capital gain. Without doing anything else, I would have owed capital gains tax on that $5,000. But because I harvested that $3,256 Bitcoin loss in November, the two get netted out against each other. The $5,000 in stock gains minus the $3,256 loss means I just had a net capital gain of $1,744. So assuming my short-term capital gains tax rate is 26%, instead of paying 26% of $5,000, which is about $1,300, I'm paying 26% of just $1,744. That's about $453. The difference? I saved $846 in taxes with this one trade. And remember, I didn't have to give up any Bitcoin to get this benefit. I sold, I bought back at a lower price, and I ended up with slightly more sats than I started with. The tax savings are essentially free, on top of a position that I was going to hold anyway. And the 2 trades I made in 2026 will reduce my taxes for 2026, assuming I have capital gains to offset. Now, a few caveats before you run out and do this. First is legislative risk. Congress has proposed multiple times to extend the wash sale rule to digital assets. If that happens, this strategy will get pulled out from under us. Second is what's known as the economic substance doctrine. In theory, the IRS can challenge any transaction that has no economic purpose other than to reduce tax burden. Most accountants believe that Bitcoin's volatility and the difference that you have in your sales price versus your purchase price means that this isn't a serious concern, but it is a potential risk in the future. The third is cost basis tracking. It's important that you're tracking all of your Bitcoin purchases so you have a clear record of your cost basis for each lot. And you need to specifically identify which lots you're selling. The IRS defaults to first in, first out, but specific identification is what makes tax loss harvesting work. And as of 2025, you're required to track your cost basis on a per wallet basis. So good records are more critical than ever. The fourth is the character of the loss. Short-term losses offset short-term capital gains first, and long-term losses offset long-term gains. So think about the lots that you're harvesting and whether they have short-term or long-term capital losses. And fifth, as I keep saying, talk to your accountant. The general framework that I've laid out here is well established, but your specific situation may differ. Now look, I really don't like selling Bitcoin, but to sell Bitcoin to lock in a capital loss and buy back at a lower price to end up with slightly more Bitcoin and a lower tax bill, that's playing the game on hard mode and winning. If this was useful, hit subscribe. I'm covering Bitcoin, retirement strategy, and how those two worlds collide every single week on this channel. Smash that like button and comment below on what topic you'd like me to cover next. I'll catch you in the next video.